Hi, welcome to Rec TV Education. In the last session, we have ended the topic with accounting treatment of waste, scrap, spoilage and defectives. Now, in this session, let us start the discussion with the topic of control of waste, scrap, spoilage and defectives. Control of waste. Comparison with actual and anticipated, and whatever the difference will be given, that should be fixed on the cost center which is responsible for this type of waste. Control in case of scrap. As usual, whatever we discussed in case of a waste, same as usual. First, standards to be set based on the estimated figures, and actual scrap should be compared with standard scrap, and the cost center which is responsible for this, it should be fixed on it. In case of spoilage, it is also the same discussion as we already seen in case of waste and in case of scrap. But the control in case of defective is little bit different when we compared with waste, scrap and spoilage. When defectives are found, the inspector will make out the defective work report, giving the particulars relating to defective units and what are the normal and abnormal defective units, etc. And based on that defective work report given by the inspector regarding this defective units, the precautions should be taken accordingly. Have to control inventory. Before knowing this topic, let us have a clear understanding of some following terms like what is holding cost, what is ordering cost, what is lead time, what is reorder level, etc. Now, when we say holding cost, for calculating the cost of material, this cost is very important. Let us know how it is. So, holding cost includes cost of containers, premium paid on insurance if the insurance is taken on raw material, and cost of investment in stock. That is, for example, if 5 lakhs value of stock is blocked, so whatever the interest we are paying on the investment, it is also comes under holding cost. Cost of spoilage, evaporation, etc. For example, if we take the petrol, some percentage of petrol will evaporate. That cost also will be included in the holding cost, that is directly in the material cost. Next one is a rent of godown or factory. If the materials are stored in the godown, that also includes in the holding cost. Ordering cost. When we give order to purchase goods, we may get doubt that what cost will be incurred while giving order. So, let us see example for this clarification. When we appoint a person to give an order, the salary given to him is an ordering cost. The cost of placing an order irrespective of units ordered. Next term we are going to understand is lead time. So, lead time is the time interval between placement of order and time when goods are received into the factory. Let us see a simple example to understand this simple definition. First, I have placed an order on 10th December and I have received goods to my premises on 13th December. Now the lead time is, already we have seen in the definition, the time interval between place of order and time when goods are received. Here, order placed is 10th December. Goods received is 13th December. So, the difference is the lead time is 3 days. Inventory. In inventory level, now let us see the important term, that is when to be the order to be again to be placed. Now, it depends upon the at what level new order to be placed. So, it depends upon the lead time and it also depends upon the rate of consumption. In the lead time, we will have minimum lead time, average lead time and maximum lead time. Already in the previous we have seen what is lead time. There we have got the order time is 10 days and the goods received is, it takes 13 days. That the difference is 3 days, that is minimum lead time, and the maximum it takes 5 days and the average lead time is 4 days. Now let's see what is rate of consumption. Here we have minimum rate of consumption, average rate of consumption, maximum rate of consumption. minimum rate of consumption, that is daily for the production purpose. In this example I have taken 200 units minimum I'll consume for the production, and maximum daily I'll consume 400 units. So if I want to do this average for this, it is reorder level by average lead time. Now let us see what is economic order quantity. Here economic means cheapest, order means number of orders, quantity means units. So economic order quantity is a reorder quantity such that the total holding cost and ordering cost is minimum at this level. For example, if we consider one example, we can understand very easily. If we order a big size, holding cost will be more and ordering cost will be less. Already we have seen before understanding this topic following 4 terms, that is what is holding cost and what is ordering cost. We have considered in holding cost the interest on inventory blocked, and ordering cost we have taken one example, that is the salary given to a person appointed for making an order whenever required. So if we order in very big size, much value will be blocked in the inventory. So therefore whatever the interest we have to pay on that value which is blocked in the inventory will be very high. And if we come regarding to the ordering cost, if the order size is very big, the number of orders will be very low. So the orders placed by a person appointing for this purpose will also get a very less. So here, so this is, if you order big size, holding cost will be more and ordering cost will be less. And the situation is vice versa, that is if we order in a small size, holding cost will be less, that is the value blocked in the inventory will be very less and the number of orders will be more. So therefore ordering cost will be more. Therefore the final conclusion is economic order quantity is the level where the total cost is minimum, that is holding cost and ordering cost will be equal. Now let us see an example to understand economic order quantity very clearly. Now here in the given example it is given that annual requirement is equals to 3600 units. So at the rate of 1 per unit, the cost of 1 unit is 1 rupee. Next, holding cost, here it is given 0.16 per unit per annum. Ordering cost is equals to 50 per order. Now let us solve this in a different way. Now here reorder quantity, first the order size is 300. For this the holding cost is average quantity into holding cost per unit. Here reorder quantity is equals to 300. If we do the average, that is 300 by 2 into holding cost is given that 0.16 per unit. Now it is 24. Here the material cost is constant because there will be changes in the holding cost and ordering cost depending upon the order size we order. But the annual requirement of this 3600 units at the rate of 1 per unit will be constant. Whatever the different order size we make, at last we will get the 3600 units only. So the material cost is constant in this case. Now ordering cost is equals to annual requirement by reorder quantity. Here annual requirement is equals to 3600 units and reorder quantity in this case is equals to 300 units into that we get number of orders. So number of orders into ordering cost per unit, that is 50 in this case it is given, it is equals to 600. Now the total cost is equals to, that is material cost, holding cost and ordering cost. If we add these three things, we will get 4224. So the same way whatever we have calculated in the case of 300, the same way we have calculated if the reorder quantity size is 900, and in case of 1800, in case of 2000, in case of 1900, in case of 1500, and in case of 1501. The same way we have to calculate holding cost, material cost, ordering cost, and 3 will be added, we will get the total cost. Now if we see this example, here the total cost is minimum at reorder quantity of 1500, that is the total cost is 3840. We have seen this, we have seen the example of economic order quantity. What is economic order quantity? It is the minimum level where ordering and holding cost will be less. So here in this problem 1500 is the economic order quantity. Now let us see a very simple formula by using our regular mathematical calculations, but this formula we can use only when we know the purchase price is fixed and annual consumption is known. When this 2 is available, we can use this formula for solving the problems given for the examination. Now already we know that total cost is equals to holding cost plus ordering cost. Here ordering cost is equals to number of orders into ordering cost per unit, that is number of orders is equals to annual demand by reorder quantity into ordering cost per order plus holding cost is equals to quantity demanded average. We have to take the average of this into holding cost per unit per annum. Now applying derivatives, that is dt by dq is equals to, we have to take AO. We know that variable, that is derivative of x variable is equals to x square. If you take in this way, that is 1 by x square. In place of x here we are taking q. Now plus I by 2 into, so derivative of x is equals to 1, that is dt by dq we can take it as a 0. Now when we take the negative after equals to, we will get I by 2 into 1 is equals to AO by q square. Now q square is equals to 2AO by I. So if we take root other side, q is equals to root of 2AO by I. This formula is very simple for calculating the economic order quantity, but the only remember you have to do is to apply this formula. Once again these 2 points need to be seen very carefully, that is purchase price is fixed, annual consumption is known, then only we can use this formula. Graph to understand very clearly. Here the stock level decreases from maximum to minimum line. It touches minimum line and again it goes on increases and touches maximum stock level. Here when we places an order, this stock comes to the factory premises, and whatever the stock is coming, that we use in a production process. So when it goes into production process, the material whatever enters slowly decreases and reaches to the minimum stock. So after that, when it reaches to the minimum minimum stock, so again by placing an order, again some stock adds to this and again it increases and reaches to the maximum stock level. Here reorder level means at what level it has to be, order has to be placed. Now at the reorder level line, when we place an order and till it reaches, that difference is already we have seen, that is lead time. Now so the difference between here we can clearly see here I have given the arrow mark lead time. So that is the difference between order placed. So when we see the first line, a very big line, it touches the reorder level, and when we see very short line, that is from the minimum stock level line, so that is it completely over, the goods are completely finished. So that difference, so when all goods are received, again it increases, so that difference is known as lead time. Now let us see a simple formulas for maximum stock level and minimum stock level. Already we have completed what is reorder level. Now let us see this maximum stock level and minimum stock level. Minimum level, so it is the lowest figure of inventory which must be maintained in hand at all times, so that there is no stoppage of production due to non-availability of inventory. So for solving the minimum level, this formula can be used for this calculations. That is, minimum level of inventory is equals to reorder level minus average rate of consumption into average time of inventory delivery. So this is the minimum level. So what we need for to calculate this? So we need to have information about the maximum consumption and maximum delivery period, so to determine the reorder level, and we need to calculate average rate of consumption for each inventory item and average delivery period for each item. So the average can be made by maximum and minimum period. Next one is maximum level. So it is the maximum figure of inventory held in stock at any time. The formula used to calculate this maximum level of inventory is equals to reorder level plus reorder quantity minus minimum consumption into minimum reorder period. So to fix this maximum level of inventory, we need a reorder level, and it depends upon the maximum rate of consumption and maximum delivery period, and we need to have knowledge about the minimum consumption and minimum delivery period, and it also requires the economic order quantity, so that is reorder quantity. Next, what is the storage space and what are the nature of items, what are their price per unit, also should be taken into consideration for fixing this maximum level. ABC analysis, it is one of the technique of inventory control. Here under this technique, usually the items are divided into three categories according to their importance, that is based on their value and frequency of replenishment, that is A category items, B category items, C category items. That is, A category items consists of only a small percentage of total items handled by stores, but there will be heavy investments in the inventory because of their high prices or because of their heavy requirement, or even in case of a both. So that is 10% of total items handled by the stores department, but there will be a huge investment, that is nearly 70% of inventory value is because of this A category items. So we'll divide this material based on this, and we'll keep one is A category, one is B category, and another one is C category. Now when we comes to next category, that is B category, these are actually very less important, that is it may be equal. So 20% of total items handled by stores and 20% of inventory value in the B category items. Next, C category items, actually these items does not require much investments, that it may be about just only 10% in inventory value, but they are nearly 70% of the total items handled by the store. So this is B category, okay, both are almost similar, equal, so items handled and inventory value almost equal. But when we compare A category items and C category items, A category items are actually very less hold, but the investment is very more in case of A category item. But in case of C category items, these are very less inventory value, but these items are more hold by the stores department. Now actually, what is the use of using this ABC analysis? So let's see some advantages of using this ABC analysis. So lower cost, one thing. Why we'll do all the analysis? To reduce the cost. So how this cost reduces is, if we divide the items based on this category, we'll able to understand when to be ordered, which items to be ordered to be placed, which items to be minimized, which items to be maximized. So with that, what we can do, we can lower the cost. Next, systematic working. There will be a systematic working. Next, here actually in this system, items are classified as high price, medium price, low price. These all are the things. Two-bin system. This is another technique for inventory control. Here under two-bin system, each bin is divided into two parts as I have given in the diagram. See there in the diagram, I have given one bin. It is divided into two parts. One is very smaller part and another one is larger part. In smaller part, the quantity equals to minimum stock should be placed, and the remaining quantity, whatever is there after minimum stock, it should be placed in a larger part. When materials are issued, it should be issued from the larger part. But when we issue, the material gets reduced, so it slowly reduces. There I have given the line from issues, it slowly reduces and it touches the smaller part line. When it touches, the fresh order is to be placed. So when it slowly goes down, again when after placing an order, again we'll get the new purchases and again it increases. Again the same process will goes. So first a smaller part is to be filled with a minimum stock, and again whatever the remaining is there, it has to be kept in a larger part, and again issues and again fresh order. This goes on continuous. So this is the third technique for inventory control.